So, what is our syllabus? One, CPA 16 is a continuation of CPA 10. CPA 10 is the financial what? Management. So in structuring the CPA 16, we assume that it is a continuation of CPA 10. We assume that a student has knowledge that you gathered from CPA 10. Are we together? So therefore, the two subjects are not separate. One is a continuation of the other. So even in the exam, you expect to see some areas of CPA 10 coming out. We have 10 topics or syllabus areas, but, and I emphasize that, the critical areas of this subject are those that have highlighted. Capital budgeting. A student of advanced financial management, there is no way you can go through the course and pass the paper without knowing capital what? Capital budgeting. That is the critical area of the paper. Capital budgeting. So when you talk about capital budgeting, we are referring to the investment decision. Are you okay with the NPV? Are you okay with the internal rate of return? Are you okay with the payback period? Are you okay with the accounting rate of return? Are you okay with the APV? Are we together? Those areas must be clear to you. Capital budgeting. Because that forms the core of the paper. You have looked at past papers for many sittings and you'll never find one that has no what? Capital budgeting. So as you study in your colleges, please put a lot of emphasis on capital budgeting. Because that is critical to us. That a good financial manager is one who can evaluate a project. Are we together? You want to invest in project X. Are you able to evaluate its viability? How do you evaluate its viability? Are you able to apply NPV? Are you able to use IRR? Are you able to use the non-discounted techniques, the payback, the accounting rate of return? When you look at November 2019, question 1 was on that, isn't it? We tested the students on accounting rate of return. Many students demonstrated knowledge of the NPV. What does that show? It shows that there is some laxity, that when you are studying this, I think you isolate, you spot study, you spot revise. Students did not demonstrate comprehensive knowledge of the whole syllabus, of the whole topic of capital budgeting. Yet it is critical. We have cost of capital. You know that a business is financed by what? Equity and debt. Are we together? A business is financed by equity and what? And debt. Therefore, that's what we call the capital. The capital of a business is equity plus debt. Therefore, as a financial manager, do you know the cost of each source of finance? So if you're financing your business with equity, can you determine the cost of equity? Can you determine the cost of debt? Can you determine the cost of preference share capital? Can you determine the cost of retained earnings? Because that helps you to choose the most, or the lowest cost of finance, the cheapest cost of finance. So cost of capital is very critical in this paper. We have the capital structure. How is the capital of a business structured? Is it mainly debt, or it is mainly equity, or it is a balance of the two? Capital structure. That is another critical area of the subject. Corporate restructuring. Companies undergo mergers, takeovers, acquisitions, all together. And we are interested in that. Corporate restructuring. Recently, we have a restructuring that is coming up. Have you heard about NC Bank and the CBA? You have heard about that restructuring? It should be effective 1st April. So to an examiner, that attracts our attention. So you need to be very keen on corporate restructuring. There we're looking at things of mergers. What are the benefits that come with mergers? That was tested in November 2019. You have looked at the paper. You need to look at the takeovers. What are the benefits? What are the drawbacks of takeovers? Corporate restructuring. It's another critical area of the subject. So you need to pay attention to corporate restructuring. The other critical area of the subject is ethics and governance. You'll have the questions on ethics and governance. In ethics and governance, what are we looking out for? Conflict of interest. Are we together? You are the MD of a company. Maybe you want to invest in acquiring new machines, but you know that your brother is a supplier of the same machines. Are we together? And now you contact your brother to participate in the bidding process. Is there a conflict of interest? Yes. So that is, we are interested in that. We are interested in governance, corporate governance, how our entities manage it. That is corporate governance. The mechanisms, how to get the principles of governance. We are interested in that. The investment policies, money laundering, how together. Money laundering, how you make that money to appear as legit money. We are interested in that. But at this level, we shall not necessarily ask you the stages of money what? Laundering. But we want you to show us the application. How can someone make that money appear as what? Clean money. We want you to evaluate. We want you to evaluate the effects that money laundering can have to an entity or to a country from a wider perspective. Ethics and governance. So, our paper is 80% quantitative analysis. When I say 80%, I mean that when you look at those syllabus areas, apart from ethics and governance, the rest of the areas have some computations. So if the subject is 10 topics, 8 topics have some computations. So at this level, we do not expect you to only compute. We expect you to compute and analyze. Is that okay? That is why the questions are evaluate, justify, show the validity. How together? Advise. If a question is advised, it does not mean that just write theory. Can you give us a computation as a basis for the advice that you are giving management? Remember the question is required to assume certain positions. That assume you are a financial consultant. Really, a financial consultant should give a proper analysis, isn't it? But you find people giving generic analysis. Generic answers don't earn a lot of marks. Although leniently they can score. So analysis means I have done the computations and now I'm explaining what I have computed means. Are we together? If I have computed my NPV as 2.5 million, what does it mean? Are we together? If I have computed my IRR as 5%, what does it mean? Can you advise management? Using the facts in the scenario that we have given. So you have the 80% as quantitative analysis. Don't only compute, but attach value to what you have done what? Computed. The areas, we have some theoretical areas. As you have said that it is 80% computational, but we have some theoretical areas. Areas like Islamic finance, that is what? Theoretical. Areas like ethics and governance, those are theoretical areas. So you may expect questions on Islamic finance. It can be on structures of Islamic finance. It can be on the application of Islamic finance in Uganda. That is what was tested in November 2019. What are the drawbacks of investing in Islamic financial instruments? Are we together? So those are theoretical areas which a student can read and understand properly. Then, what are the learning outcomes of this paper? We expect you to evaluate plans, actions, and financial statements. How do you evaluate? Their techniques. How together? Management intends to install this machine. They have projected that it will give us the following cash flows. Can you evaluate the management's plan? Management intends to engage into a merger with the company ABC Limited. Can you evaluate such a proposal? How together? So your evaluation must be supported by computations. It is not only the theoretical evaluations. So can you evaluate plans and action and the financial statements? At times, the paper can require to evaluate the financial statements themselves. Performance, can you evaluate performance? Altogether, when you're evaluating performance, common knowledge is, can you use ratio analysis? You have seen that. So can you evaluate financial statements? As a financial manager, a student of this paper, we expect you to have that knowledge. I have looked at a balance sheet, I've looked at an income statement, and the net profit is 2 billion. What does that mean? Altogether, to you, if a business has a revenue of 100 billion and it reports profit of 2 billion, what does that mean? Altogether, to a layman, that business is profitable, isn't it? But now to you, using the scientific approaches, is that business worth an investment? You get the logic? So can you evaluate such? I've looked at a balance sheet and the total assets are 100 billion. But of that, 40 billion is in receivables. What does that mean? Are there issues to do with the debtors management in the company? Is that okay? Are there issues to do with the asset replacement? If my total non-current assets are only 5 billion out of the 100 billion, what does that signal? Altogether, that these assets are almost fully depreciated. What does it mean on ratios? That this company will have a good return on capital employed because the denominator has significantly deteriorated. So we expect you to be able to evaluate such information and advise. Evaluate dividend policies. Companies make profits, and part of that profits is declared as dividends, and the balance is retained as part of equity. So can you evaluate dividend policies adopted by different companies? Altogether, a company can adopt a constant payout ratio that for us, for all profits that we make, 40% is paid out as dividend. Is that okay? A company can adopt a constant ratio but plus a certain amount. Can you evaluate that? Another company can adopt a policy that for us, whatever we make as a profit is retained, and therefore we don't pay out dividends. Are you able to evaluate that? Are you able to tell us about the dividend irrelevance and relevant theories? You have seen those theories. Do dividends matter? Payment of dividends matter, or it doesn't matter? So are you able, as a student, can you evaluate that? Because financial management is built on those 4 decisions, which are capital budgeting, which are financing decision, dividend policy decision, and working capital. For you to have certainty that I will go past this paper and apply the knowledge later, you must be very okay with those 4 decisions. Because it's not a matter of just passing the paper, but can you apply the knowledge going forward? Altogether. Then, can you advise management on investment decisions? That one we have seen. How do you advise management? You evaluate a decision and give the advice. Here, whenever we say advise, it requires you to compute and tell us. Altogether. Advise does not mean that simply give us the theoretical history about our plan. Can you compute and tell us? Because here we assume that a rational investor is one who is interested in maximizing returns. Altogether. And to maximize returns, what you invest in must be profitable, isn't it? Good. So we expect you to advise on financing options, the same. Capital structure. As we said, the business is financed by debt and equity. What are the financing options? Can I finance my business by leasing? Can I finance it by debt? Can I finance it by own savings? Can I finance it by what? Can I issue bonds altogether? Or I can invest in Islamic financial instruments. So can you advise on financing options? Recommend strategies on restructuring, takeover, etc. That's also common knowledge. Can you recommend to management whether it is worthwhile to take over or to merge with another company? And if so, what are the various strategies that a company can adopt? So, Those are the learning outcomes of the subject. The structure, 2 sections, section A, 50 marks. That is where I want you to pay much attention. When you look at those 50 marks, 60% are what? Computational. And the balance of the 40% is the theoretical part of it. That will be the standard. 60% computational and 40% theory. So as a student, we expect you at least to have 25 out of 50 on that. And it's very simple. Analyze the facts in the scenario and apply the knowledge that you have. So section B, 4 optional questions, attempt 2, each 25 marks, 50% computational, 50% theoretical. There is a balance. That in section B, if the question is 25 marks, at least 12 and 13 altogether, theory and the computations. So again, you should be prepared to handle that. Questions are scenario based. There are no questions of they are not generic questions that explain the advantages of debt finance over equity finance. No, it will come from a scenario altogether. That company A has been financed by Equity Assisting Corporation. Recently, management resolved altogether to borrow 200 billion from banker X. This was on the justification that borrowing would improve A, B, C, and D required. Evaluate management's decision to incorporate debt finance. Is that okay? That is coming from a what? From a scenario. It is not that explain the advantages and disadvantages of this. No. The question is required to evaluate, justify, advise. Altogether. But in effect, in principle, we are examining that concept of explaining the advantages and disadvantages, but from a scenario point of view. So when you look at the scenario, don't simply look at the size, how big the scenario is. Your interest should be to get out the facts. Altogether, ladies and gentlemen, that should be your interest. Can I get out the facts from this scenario? Not everything that is given in the scenario is important. But you know that when a student looks at the size of the scenario, by mere looking at the size, some students give up. That this thing was 3 pages, for me I could not handle. But did you read to pick out the what? The facts. You may find that in a paragraph there is nothing that is relevant to the questions asked. Altogether. And you may find that there is one paragraph that has around 60% of the information required to answer the questions. So are you able to read and pick out the facts? As a student at this level, we expect you to have done a lot of practice so that you can use a few minutes to read the scenario and identify what is relevant and what is irrelevant. Altogether. Then you're expected to evaluate and advise management or board, because that is the structure of the questions. As a financial consultant, prepare a report to board, prepare a report to management. Again, there you need to know, if I'm reporting as, say, finance manager, I'm reporting to my MD altogether, and the question tells me to prepare what? A report. What will be the format of the report? We emphasize the memo format, and that also scores altogether. When you are answering a question of writing a what? A report. There must be a format of the report. What is the format of the memo? To, from, date and what? Subject. To, from, date, subject. We do not expect at any point, would not expect the memo to be from, to, date, and the subject, because we don't assume that scenario. That scenario is one that assumes that it's now maybe the MD writing to a junior level staff altogether. The MD cannot prepare a report to the head of finance altogether. It is the head of finance to prepare to the MD, or it is the MD to prepare to the board altogether. So when we say write a report, that one only is a question. Write a report. What is the format of the report? To, from, date, and what? Subject. And that scores itself. But you find others saying, the question is write a report, and someone begins straight away. Evaluation of project X. Is that a report? You find others jumping around 4 pages. One page is a report. Next page by CPA so and so. At that level, you are not yet a what? The question is like, as a financial consultant, and you're writing as CPA who? CPA leaders. You have already failed, isn't it? Because we want you to assume the position of a financial consultant, not to write as CPA leaders. Is that okay? Then, compute, analyze, and recommend strategies. Common question. Compute, analyze, and recommend strategies. What will work and what may not work. Report writing. This one I've already emphasized. We want a what? A memo format. In the exam, you may not see the word memo, that prepare a memo. What you will see is prepare a what? A report. But for us, the report format we want is that of a what? Of a memo. Provide workings at the end of the report presented. Now, this is a problem. This is a problem. You see, your workings must come at the end of the report. Out together, Vanak. The working must come at the end of the what? Of the report. Because the question simply requires you to prepare a report. But this report must be supported by workings, what you call workings. How together? These workings will come at the end of my report. So if the report is on page 1 and 2, then the workings will come on page 3 going forward. Is that clear? Will come on page 3 going forward. Don't start with workings, because again that is common. Because you know that you are evaluating the viability of a business, then you start by doing your capital allowances, tax relief. Yes, that is correct. But it should come at the what? At the end. Now together. So in the exam, you should be able to judge that my report will cover page 1, page 2, and page 3. Then you start from that. And whenever you are writing, you refer to this report, refer to this appendix, refer to this working. So we expect you to provide workings to support your analysis. Can you evaluate investment decisions, financing options, dividend policies, restructuring, etc.? That one we have already talked about. We expect students to report on ethics and governance, as we have said. Can you report on fraud, conflict of interest, money laundering, company policies, etc.? Remember, we said that is one of the critical areas, isn't it, of the subject. Students, we expect you to identify relevant information. That is very, very important. You may actually waste a lot of time writing what is not relevant. Now, together. In November 2019, the question was evaluate the performance, evaluate the viability of this project using accounting rate of return. People spent a lot of time computing the working capital. In determining accounting profits, you have done accounting 1, financial reporting, advanced reporting. Have you ever seen working capital coming up as an expense? Have you? Do not attempt to separate the knowledge of the other papers from the knowledge of this paper. If I'm interested in accounting profits, there is no way working capital will come in. Altogether. So as a student, you should be able to identify the relevant what? Information for each question that you try to attempt. That helps you to have correct computations which form the basis of your decision. Remember, we said you advise based on the computations that you have done. Altogether. So if in the computations the investment is not worthwhile, that will be my advice. But You may have a scenario where a student maybe has NPV as negative, but comes to the advice and say the business is viable since it gives a positive NPV. Yet in the computation it is negative. Are we together? So that shows that this student simply knows the principle around the subject area, but failed to identify which information was relevant. Are we together? Be consistent. If in your evaluations the NPV is negative, then even the advice should be what? That you reject. Is that okay? Because by doing that, you have applied the principle of capital budgeting. Are we together? And at times the examiners are interested in you demonstrating knowledge of the principle and not accuracy. Is that okay? Professional presentation. So in answering, that should come out clearly. A student who says that this project should be accepted because it has a positive NPV, and another one who says that I advise management to consider this project since it gives a positive NPV. By accepting this, it will imply that the wealth of the shareholders will be improved by this much. Who was professionally presented? The second one. The first student has given us generic answers. That's a generic answer, isn't it? It is generic to say that accept if NPV is positive. What does that mean as a student of advanced financial management? Can you add value to what you're giving us? Out together. That one alone attracts professional marks. Because this paper is not answered the same way someone would answer an academic paper, a bachelor's program. Out together. In a bachelor's program, if you say accept because NPV is positive, that would be okay. But here, can you tell us what does that mean? Is that okay? If the entity is government and the NPV is negative, would the rule still apply? It may not. Have you looked at the objectives of the entity? Is the objective of the entity to maximize profits or service delivery? Are you seeing that? So you should be able to professionally present. Attempt. Students, we expect you to report on modern issues in financial management. There are modern issues in financial management. There are modern issues in financial management. Like Islamic banking, that is modern. For so long we have had conventional banking here. This banking of Centenary, Stanbic is called conventional banking. For so long, that's what we have had here. But now there is a new player, a new form of banking that is coming into the equation, and that is what? Islamic banking. As a student of financial management, do you have knowledge on Islamic banking? Because at the end of the day, you are the same student who will end up in the commercial banks as head of treasury. All together. Head of treasury and investments. Do you understand the risks around that portfolio of Islamic banking? Do you understand the risk around that? Do you understand the Islamic financing structures? The financial instruments? Do you understand the composition of the Sharia board? And what does the Sharia board mean? Do you understand that? Do you understand the application of those structures in Uganda? Is our law compatible with the requirements of Islamic finance? Are we together? So as a student, we expect you to go and have a detail of that. Do we have a law? If it is there, is it compatible with the current law on conventional banking? Are there banks that have already implemented Islamic banking? Are there banks that are going full in Islamic banking, or they just have to operate a window of Islamic banking? Does this only mean that only Muslims will qualify? Are we together? What is it in Islamic banking? But The questions on Islamic banking or Islamic finance are qualitative and what? Factual. And they will be simple questions. Look at the past papers. They are straightforward and factual. It can be to explain the different Islamic financing structures. It can be to compare and contrast. It can be the application. It can be the drawbacks. Straightforward and what? Factual. What is the relevance of CPA 16? Why the subject? Why do you have to go through this stress altogether? One, it helps in evaluation of investments. As a professional accountant, we do not expect you to take on an investment that you have not scientifically evaluated. That's why you have to study this. Why do I need to evaluate investments? Because capital budgeting forms the most costly decision of every organization. Then I need to evaluate, because capital budgeting or the investment decision is the most costly what? Decision. You invest in money and that is all. You have purchased non-current assets. You have tied up money in maybe buses or machines or what. So if you get that decision wrong, you have ideally affected your liquidity position. You have affected your ability to invest in other viable investments altogether. That is why it is very critical. It fits well with the current business environment. Our current business environment is characterized by takeovers and mergers. I'm telling you that is look at CBA and NC Bank. Conventional versus Islamic banking. What were the drawbacks of the conventional banking? Things to do with the high interest rates. Was a disadvantage in conventional banking. You go to bank A and they can lend you at 25% interest, isn't it? Islamic finance comes on table and says, look, for us it is profit sharing altogether. You do not have to pay interest. So those are current developments in the area of finance. You look at compliance with the religion. Yes, I'm not paying interest, but there's additional compliance issues that if I'm to take on this product, I must comply with this Sharia requirement altogether. So those are current issues in our financial space. With the current shift in international trade, yes, again we're still looking at the relevance. Why advanced financial management? The world has now become a global village. People trade internationally, isn't it? People trade online. You have bought cars online, isn't it? You just order for goods online. But there are risks involved. The moment you open your borders, you expose yourself to certain risks, political risks, foreign exchange risks, altogether. So, if that is the case, therefore you need to hedge. But you don't understand how hedging works if you have studied this subject. How can I hedge against this foreign exchange risk? Should I enter into forward contracts? Should I pay immediately? Altogether. Should I go for money markets? Or I do nothing? Doing nothing means I'm not going to hedge. What I would have bought from abroad, I can purchase locally. So you need to hedge because of the political risks and the forex risks. There is a need to finance big ticket projects. What do we mean by big ticket projects? Big investments. Companies expand every day. But to expand, you may not have owner's equity, isn't it? Maybe you have not saved to that tune of that requires to the tune of the investment required in expansion. But because you need to expand, you may be forced into borrowing And that brings in debt finance. So you need to study the subject to understand what are the risks that come with the debt finance and how can I mitigate them. And by having the knowledge about debt finance, will I advise management to go that way, or I will advise management to hold on and maybe we accumulate savings and fully finance our business with equity. So you need that knowledge because you want to expand, and therefore you may have to go into debt finance. So the cost of debt and its impact, that is the gearing, the impact of gearing, are very critical. If I want to borrow, what is the cost of borrowing? How much am I paying back as interest? The cost of borrowing may not necessarily be interest only, but insurance fees. You have ever borrowed from banks, isn't it? Loan processing fees, loan commitment fees, loan arrangement fees. That is all cost of capital, cost of borrowing. What will be the impact of borrowing to my gearing position? I already have a debt of say 20% of my capital. But if I acquire an extra loan, will my financial risk increase? The impact of gearing. If the financial risk increase that I have accepted, are there benefits that come because I have debt finance? Are we together? So you need to look at that. Studying corporate governance is important. Again, we are still looking at the relevance of CPA 16. Why do we have to examine about corporate governance? It is very important because we have seen cases where poor governance has been cited as the reason for their collapse. I've given some examples there. The Barings Bank in Britain. By the time it collapsed, it was the second largest bank in Britain. ICB, that is International Credit Bank in Uganda. You remember the issues to do with ICB of cattle, where the bank had a board with the 3 members, the owner himself, cattle, his wife, and a 5-year-old child. Was there corporate governance? That was the board of the bank with 3 what? 3 members. So the board included a 5-year-old child. The board is a decision-making body in an organization, isn't it? So a 5-year-old is making a decision for what? For a bank. This bank had a depositors' interest, the depositors' funds. Corporate governance was cited. Greenland Bank are the same. It was governance issues. There was no board. Sulaimani Chigundu, the owner, was the MD, was the board chairman, and was a full board. One person. How together? Because that has come up in the reports that governance is responsible for failure of such companies. We need to look at governance critically. The most recent case of Crane Bank, corporate governance. How together? The owner was the chairman of the board and was full board and was the MD and was the head of credit. He could disburse loans, approve, then recover. At the same time, hold the meetings to ask management, why did you sanction such a loan? How together? Corporate governance. And for this one, Ugandan is new, isn't it? You knew? Corporate governance. So this syndrome is common in our businesses here, and we need to pay attention to it. For us, in this paper, we shall not go into the codes, Cadbury, King, we want basic what? Governance. Basic governance requires you to tell us about conflict of interest, fraud, tell us about investment policies. Do you have policies as a company that guide your activities basically? For us, that is our interest.